starting your journey to financial freedom. Now. You're listening to the New Investor Podcast.
This is the Young Investor for the New Investor Podcast, and the markets closed in the green yesterday due to a wide variety of factors, but all of the 11 sectors and the S&P 500 were up, and as far as I'm concerned, my gains occurred through my strong exposure to tech stocks. So a good day overall. I recovered my lost gains again, and I still look forward to some positive movement in the near future, as I still strongly believe the US-China trade war will subsidize at one point, and we still have a full year to go before the US elections. So Trump will have no choice but to show solid economics to his electorate to win again. So in the meantime, I built a new watch list focusing on data centers, which are those dedicated spaces or buildings that house computer, telecom, and storage systems. So we can't run the internet without them, and there are plenty of solid companies out there. So I am interested in knowing more about them and how they operate, make money, what is their cost structure, and how they compete. So I am currently researching them. This may sound boring, but again, we invest in what we love and understand. And I am a big fan of tech, so researching on data centers is okay for me. So what is your passion? Invest in them. I think there are two ways to actually approach this really. I am receiving overwhelming DMs on Instagram from young investors asking in general how to start, and I am very pleased to assist as I can, as much as I can. But if I could summarize a more practical approach to investing as opposed to a buy and hold strategy, as I detailed in one of my episodes, which may appear vague despite being so simple, I think it would be this. So you can start by investing in individual stocks, which means basically you invest directly into businesses and buy stocks specifically of these companies. This is an approach that has the potential to substantially increase your capital gains, provided you have made the right choice in the company you invested into, and if they end up growing. They carry more risk, of course, should the companies you invested into do not do well or do not do as well as you expected. But I like this strategy as it allows me to focus my investment decisions on a few companies while keeping an eye on the market as a whole as well. So buying or selling single stocks occur also fewer fees as well than investing in mutual funds. So I also like owning a portion of a major company. It becomes more of a sentimental connection and value to me. So that's just me, of course. Also, you can invest in mutual funds or index funds that invest in stocks. Usually the difference between the two is that mutual funds usually employs human experts to make the investment decisions on what companies to invest in, and index funds will rather invest automatically on companies that are on a particular market index and other criterias, but they have also a lower fee than mutual funds, and fees are important when you invest. You have to consider the fee structure. So you can invest in them through a brokerage firm or directly with the companies that run them, while the index funds can be purchased through a brokerage firm also, or directly with your individual brokerage account, same way you purchase stocks. So I have not yet invested in them. So investing also in bonds as opposed to the stock market, usually they are issued by companies or by government agencies as a way to borrow money in the form of a loan with interest payable to you. They are less risky than stocks, but will not deliver high returns if the company does well. Some of them have high benefits in terms of taxation should you purchase government bonds. So I have not yet invested in them too. There are other ways to invest your money, many, of course, but these are the ones I am familiar with. You will not hear me talking about Forex or crypto or other forms of investments, as I am not interested in them. I try to keep it simple for myself, and these three investing strategies have plenty also to still learn about already. So there is, however, one way to really start investing. If you are looking at making your very first steps into investing, a way that would allow you to keep an eye on the market as well as a whole, and understand its dynamics, learn about it, and still be able to apply a buy and hold strategy with excellent returns over time, I will suggest that you actually buy the market. Buying the market means that you would own the whole basket of stocks. It usually refers to buying the S&P 500 index, which constitute the 500 of the largest companies in the United States. You will own micro shares or micro portion of these companies, and that would be an excellent first step to take. So I do suggest that you start there. So on those good investing words, I wish you well and a fantastic day ahead. Thank you for listening to the podcast, and I really hope that it brings you some additional support on your own journey towards financial freedom. Don't forget to hit that subscribe button to never miss an episode, and looking forward to your DM and follow on Instagram at New Investor Podcast. In the meantime, stay invested, be patient, and keep playing the long-term game.